Hey guys, Kunal here, Bulls on Wall Street. What is going on? The bloodbath continues. We dropped 6% on Friday. We're opening down at 5% today. Maybe we get a limit down. Who knows? But we're getting into the fun stuff, all right? This is where dreams are made or crushed. It is the hardest type of trading to do, which is the market is crashing. Everybody wants to buy the dip. But if you're in early, you lose big, right? If you're in early, you lose big. And so what the heck do we do? Look, in all intents purposes, we're going to open down 4 or 5% tomorrow. We're already there. In a historical perspective, that is the biggest 3-day drop, I believe, in a row for the ES at, 3-5% days since I can remember. Maybe all time, I don't know, but since I can remember. So we do have to take that into context. The fear will be at all-time levels. My guess is the VIX opens up back up here somewhere, right? And so this is where usually bottoms are found temporarily, and so I do anticipate that we do have the potential to get a little bouncy McGee if we can open up here. All right. Now, look, there's a lot of what ifs. Like I said, this is the toughest type of trade to do. As a day trader, it's okay because I can just use a 5-minute chart and I can stop out. Right. I go in and I take a look at the opening ranges, and whatever happens, happens. And so, the game plan for me tomorrow, what I'll do, and you don't have to be in, you can be in late, right? Is I will look, see where the market opens up, right? So probably be at, let's say 400, give or take. I'll start watching around 10 a.m., right? If an opening range develops and we can take it out post 10 a.m., give or take, I'll try the long, and then we'll have essentially a way to manage our risk, which is at that low of day. And then if we get the follow through to the upside, then it's like, okay, we can have it. And if we don't, then we just stop out and you live to fight another day. And I think that's basically the play, for tomorrow. I don't believe tomorrow you can do any shorts at all. And it may even be tough to do longs, right? So just kind of be mindful. On day ones and day twos of market drops is where the money is made. On day threes, you'll get a lot of short-term spikes up and down. And so it's not an easy trade. Like what I notice on those type of things is that's when you get the most fake outs. And so for a majority of people, I would say you probably stay away from this. For the degenerates out there or just people that are in it for the love of the game, dude, we're in historic times. We got to give it a try, right? That's how I'm looking at it. We're in historic times. We got to give it a try. So for me personally, I'll adhere to a max loss on my account. I would say in my day trading account, I'm willing to risk, let's say, 5 to 10% of the account size, right? To catch this bounce, depending on where we open tomorrow, right? And that's the risk I'm giving, And when I say risk, like 5 to 10%, that's like a max, right? So like a max pain, let's say if I go all in and I stop out of all my positions, I would lose 5% of my account, right? And in return, I would be expecting something of many folds of that. Now, whether we get that or not, I don't know, right? But that's kind of how you want to play it. If you're like, say you're trading a $50,000 account, you would say like, okay, I'm really risking the $2,500 to maybe $5,000 of my account. Then if that happens, then I'm out of the game and I participated and I had some fun and whatever it might be. Be a little bit lower than that. I'm just saying this is kind of how I personally am looking at it. If you're going to trade tomorrow, I think you just stay with the big boys, right? You can go, Palantir will probably open up right at the 200-day moving average. I think that's a nice, easy, probably spot. My guess is Tesla opens at 200, give or take. So you'll be, kind of near these lows over here. Nvidia will probably open in the 80s. I think you might be able to get it down over here. We'll see what's up. Now, look, these are going to be momentary bounces, right? They're not really, this is not like, hey, the market's bottom type of thing, but we're going to get these kind of sharp little bounces. I don't know if the market bounces tomorrow, but we have to play it to that way. I think it's too late in the game to short into the hole. The next time you guys load shorts will be, right, into these bounces, into the moving averages, into these declining moving averages, somewhere around there. And then, we kind of play it back as, the bear market might continue for a little bit of time. But I'm talking about for tomorrow, what we need to see is that VIX open up real high, right? We need to see that VIX open up real high. I think maybe 60, 70 blowout would be ideal. And then we want to see what the opening range highs are on the Qs. If we get the follow through post 10 a.m. and it holds, then we can add a little bit to it and we'll see if we can build upon it. Now remember, we are in a news cycle, and so the market could be trending higher for a period of time tomorrow, and then the Trumpster could come in and shit on it all. And hey, that's markets, and you'd have to stop out and regurgitate and stuff like that. Expect a lot of fake outs tomorrow. Bounce trades are the hardest trades in the world to do. I repeat, bounce trades are the hardest trades in the world to do. But there's a couple things I think are going to happen tomorrow too. The market breadth, if the T2108 is going to open sub 5. And anytime I've seen that, the lowest I ever saw it get was in the 3s during COVID times. If we got into that 3s, I mean, not only is it probably, a bounce that we do for the day, but, you may be even adding in some stocks that you would hold for a few days, right? Or longer in like your significantly longer term type of accounts. That type of oversold market breadth is a rare bird. It's a real rare bird. And so I would try to needle it. If you look here, you got 14% of stocks are above their 200-day moving average. It is rare to see something, into this zones. You get them once or twice. In 2020, we got the 4. So that one, it has a little bit of room. So, that I got in the back of my head too. And the other thing I want to just say is in terms of 4% breakdowns, we had 2,000, a couple days in a row, 2,000. Those look like blowout numbers to me too in terms of market breadth. Once again, I don't know if we, this is like some long-term bounce or anything like that. But we're going to open up around 400, maybe even lower, right? And at that point, we're at 25% from the peak. We're going to we got to try for the bounce, right? It's not the easiest play. It may not even be the correct play if you're a trend trader because it's a counter trend trade, which is the hardest thing to do. But that's where the odds are. When you get that low of market breadth, you got to try. Now, look, I'm primarily a day trader, so I can stop out on a 5-minute basis. If you're a swing trader, it's different, right? Because it's like you've got to use looser stop losses, and dude, there's all this volatility. It's a much harder trick. As a day trader, I mean, you could even go to a 1 or 2 minute chart, right, and really time things down to the penny. Yeah, you may get stopped out a lot, right? But you can kind of narrow your risk down a little bit. And so I think that becomes just an easier proposition than if you're a swing trader. If you're a swing trader, I'm probably staying out of the market until I get, more a trending environment. Now, if you're an investor, right, or a position trader, then that's where you may want to look in and say, like, okay, I've got some favorites that I may be looking into, especially if the QQQs gets to close to the 200-day moving average on the weekly, which you can see here has been since 2015, the long-term bounce point, right? Now, look, in 2022, 2023, we hung out at the 200 and even a little bit lower for weeks at a time. So, keep that into the back of your head too, right? Like, just because you're at the 200 doesn't mean you can't meander around there. But if you look around since 2010, 9, you've only, you tested it here, tested it here, tested it here. Then you meandered around a little bit there. So you're not, you've got yourself a little bit of something, right? So just got to be mindful of that. Hey, this is the markets we're in, and is it easier to trade when the markets are a lot higher? 100%. Less volatility just means a lot easier. But here we are, face to face, like a couple of silver spoons. Let's enjoy it while it lasts. These are historic times. You don't get to always trade and stuff like that. Stay safe, stay clean, guys. You don't have to be a hero. Let the Supermans do it. I'm going to, of course, make my attempt because this is what I live for. But if I'm brand new, I maybe just take some notes and do it, because you don't make more money in volatile markets. The money you make the most money when the markets are boring, because everything just goes up and all your patterns will work. In this kind of market, everything is a little bit lower. So just be mindful of that. Everything is a little bit rowdier. You're going to get stopped out more. So speech over. Go have some fun. Get some rest. I think the play may be actually in the overnight markets. There may be the play there. So if you got the Webull or you've got Robinhood or something like that, where you got the 24-hour markets, keep an eye on that. You may want to look at some Hood or something like that sitting at 30. You'll have some different spots where you can get some entries, but then you got to stay up all night. So, for some of you guys, it's just better to wait till the fucking market opens, or at least pre-market tomorrow, because you buy something at 2 a.m., you're committed to, staying up all night. So that may throw you off at the open tomorrow too. So let me know if you guys need anything. I love you guys. Stay safe, stay clean, do what you got to do. Peace in the Middle East.